Good morning from the For the See Me. This is Chris Robinson with your Trader's Exclusive comment today. What are we looking at? I'm going to first start with the grains. We've had a nice 58-cent rally, almost 60-cent rally in soybeans. What drove us? Well, if you've been following along with me, I always talk about what the fund positions are. They have been massively short, 200,000 contracts of corn, 100,000 contracts of wheat, and they were short 60,000 contracts of soybeans. They have now flipped. With the 2-year high in Malaysian palm oil, it was enough to get these guys to cover their shorts. We are now looking at a situation where the funds are long about 30,000 contracts of soybeans. So that flip gave bulls an opportunity, bottom fishers an opportunity, and it's also given producers an opportunity because it's given us the highest prices we've had in about 4 months. Now, what are we looking at moving forward? Well, on March 31st, there's a planting intentions report. It's USDA. Historically, that's a market that produces a lot of volatility one way or the other because it gives us a number from the USDA as to how many acres are going to be planted. Without getting too complicated, if that number is bullish, in other words, if they're planting less acres, you'll probably see prices move higher. However, if it comes out and they're planting a lot of acres of corn and a lot more acres of soybeans, you could see the market react and correct. Now, there's an analogy I like to use. The market goes up the escalator and goes down the elevator shaft. We've had a 50-cent rally in soybeans in the past 3 to 4 weeks. You don't want to be in a situation where you're sitting there after a 50-cent rally and you have the market drop 20, 30, 40 cents on a correction, because those corrections come very quickly. So it's giving producers an opportunity to hedge some higher prices, the highest prices we've seen in 4 months. It's also giving traders and speculators a chance to make a bet. Are we going to extend higher after that report? If so, then you want to have a strategy which would extend with higher prices. If, however, you think that there's a possibility we're going to have a correction, the market's giving you a chance to take the other side of that as well. I think that's what we're going to be looking at. The funds still are a massive short, about 190,000 contracts of corn. That's about 1 billion bushels of corn. And again, if the planting intentions number on the 31st comes out with any surprises, you may have those guys scrambling. That's it for the grains. Focus on that March 31st report as an opportunity. Quickly, I'm going to shift gears and let's talk about cattle. Live cattle and feeder cattle had a great rally, about a $20 rally in feeders alone, from 146 to 166 in the past couple 6 to 7 weeks. We had a number from the USDA. It was cattle on feed came out. That projected more cattle coming into the pipeline. Prices corrected sharply. If you want to see what I'm talking about a market going up the escalator and dropping down the elevator shaft, pull up a daily chart of either fat cattle or feeder cattle. That market rallied quite a bit, and in about 3 days gave back half of its rally. So those types of reports are important. A lot of people say, why do you care about the reports? Because they're a fulcrum point where all the bulls and all the bears come together. We get some fresh information, and then the market does what it does. It has price discovery. That process of having price discovery gives you an opportunity. Doesn't matter if you're a hedger or a speculator, you know that on that date, there's a good chance that there's going to be some movement. That's about it from the For the See Me. This is Chris Robinson. If you're looking for some help with your trading or your hedging, look me up online and give me a call.